Good morning, good afternoon, good evening, folks. Michael Zuber, one rental at a time, back with his Thursday guest, Mr. Jonathan Twombly. How you doing, sir?
I'm doing great, Michael. How are you?
I'm doing great. One of the things I'm asking all of my experts this week is I'm going to ask for your opinions about something that I call supply destruction. So I know you're ready for it, but let me define what I mean by this. So everybody who follows the channel probably knows what demand destruction is. Basically, you raise prices enough or you raise the cost of debt enough and you no longer qualify to buy a mortgage or whatnot, right? It's kind of, you peel off the edges and demand is distorted. I actually believe for the first time in my adult life, and I actually may have coined this phrase, I've never heard it before, never studied it, but we may have something called supply destruction in residential real estate. I believe it will be proven historically correct to say the Fed kept rates too low for too long, right? Roughly 2 years. That has now created enough time, Jonathan, where 70% of residential loans have been originated in the last 2 years, which means most residential loans have a 2, worst case, a 3 on it. And as you know, in the residential space, roughly speaking, 75, 76% are owned by owner occupants. The other 24, 23% are investors, second homes, things of that nature. But basically what we have is we have a whole pile, hundreds of millions of folks with now a 30-year mortgage with a 2 or a 3 that I think is going to be an asset going forward. It is going to be such an asset that people who would normally sell and move up or do something don't, and thus don't list their homes, right? We are going to have supply distorted for years to come. So I have 8 categories that I'm going to ask your opinion about. Let me just pull it up. And then let me zero. Oh, actually, I think I did zero. So I'm again asking all of my experts. Let me just zero this out. So I see 8 categories where demand could potentially go up or down if my thesis is correct. We'll actually start at the bottom one because that is easiest to understand. Do you see this now?
Yeah.
So the largest factor that in a normal real estate market, again, residential, is what's called the move-up buyer, right? They buy their first home. They live there for a little while, average is 7 years. Then they sell that home and they buy another one, right? They take the equity from one, they move to the other. I believe what is going to happen in a great number of cases is people are going to want to move. We got an extra kid. We got this. We want to move, whatever. But they're going to look at their house. They're going to look at the other house. The other house costs 50, 60, 100 grand more. But the interest rate is not 2.7. It is 5.7 or 6.2 or whatever. And now their payment is not a couple of $100 more. It is thousands of dollars more. And thus people are not going to move. So again, I believe the 30-year mortgage that the Fed did because they stayed too low for too long is going to be an asset that people choose not to sell. So I believe there's going to be supply destruction, meaning these people never list. And if you don't list, you can't sell. So I think this goes negative, but I'm going to ask you 8 categories and some of these will be positive. Some will be negative.
Okay.
Does this make sense?
Yes.
So what percent of folks that would normally sell, you think won't sell because they will look at their mortgage payment and go, what, honey, we can't move. Did you see what happens to our mortgage payment? It goes from $1,200 to $2,200. We're not doing that. What, do you think this goes down at all?
Well, why, if mortgage rates go up, why won't prices adjust accordingly?
Well, if there's not enough supply, it becomes supply demand thing.
So then there'll just be enough people who still want to buy.
Correct.
That it'll keep prices high. Okay.
Correct.
That's the theory. What percentage are going to not sell? Gosh, I don't know. Because I see this already happening.
I do too.
Lots of markets anyway, but even before interest, with low interest rates, right? Where the prices got so out of control that to move up was prohibitive, even though you have equity and whatever. People not selling because they've got no place to go. Yeah. Right. So which is, I think has already happened. But this is an incremental change on that.
Correct.
I would say, okay, it'll affect another 10 to 15% of buyers.
All right, we'll put a -10. because again, I did these numbers are really hard. There's lots of talk about demand, right? Who are the buyers? Who's doing this? There's very little demand about the people who list. I've actually spent a couple hours Google searching this and I can't find it. So it's kind of weird. Anyways, next up, we have investors like me, right? I bought a bunch of stuff years ago. Maybe I'm an older landlord. I want to sell out. We are coming off a period with peak prices. Maybe I could 1031. Maybe I can't find something. I can't get my cash, whatever. Do you think investors at all are impacted, or do they just sit tight with what they have because it's already cheap, or what's going on?
Yeah, I would think that they probably would just sit tight because there's no reason for them to sell.
Cash
right?
flow is
So
great. Yeah.
Cash flow is great. They just sit on it and wait for things to start moving again. So, some of them probably would be waiting for prices to fall and even be willing to sell their property into a depressed market if it means they can buy cheaper stuff, like move up at a cheaper price. But I think in the scenario you described, probably I think a lot of people are going to just sit tight. So this is kind of be a wash.
Okay. All right.
Yeah.
Must sell. This still happens. This is, death, divorce, job transfers. This stuff happens all the time, whether it's a good market or bad market. But some of these, this happens, right?
Yeah. I mean, I don't think there's any change here. This is independent of what prices
Agreed.
are. I think a lot of these people will just rent. Like they're not, if they have to sell, they'll go and rent.
Totally agree. But yeah, totally agree. Next up, this one probably goes up. Can't afford. Foreclosures, deed in lieu, short sales, whatever you want to call it. Basically, the reason they're still in their house is because of moratoriums. They can't do a workout because they're not employed anymore, whatever it is. But basically, we haven't had any foreclosures, or many. We're about to have some. So on a percentage basis, this is probably a pretty big number because, again, you're coming off a base of nearly zero. But yeah, we're going to have more foreclosures, I think, in the next year. That'll be a source of some listings.
Yeah, although I don't think maybe this goes up 10%.
Okay.
Yeah,
that's fine.
Yeah.
How about flippers? Right. I'm on record as saying the last 2 years have been the best time to do lipstick flips. Into a flat market, it's going to be a lot harder. I think a lot of flippers, just like the last crisis, got lucky with timing, and cost of capital is going up, dead days for deliveries. Do you see people exiting flips more or less flat?
Well, I mean, if supply is restricted, I think that they're going to be having an easy time selling. Okay. Right. So it may, I mean, I would think that, the volume of flipping may be constricted if there is constricted supply. Right. But I don't think it's going to, I think it would probably lead people to, I don't think it leads to more selling necessarily. Maybe this is a wash. It's hard to figure out what the number is. I think that flippers, if supply is low, flippers will be fine.
Okay.
So
I like it. I like it. Builders, right? This one probably goes up, I would assume, if there's not a lot of existing stock going out. Builders maybe fill the void, perhaps. But again, they have their own challenges, dead days, costs, things of that nature. But do you think building goes up?
I mean, I think as long as there's still demand, and this will, interest rates will affect this, right? So if supply is low and demand stays high, then I think builders will continue to build.
Yeah. Historically speaking,
issue really is, what's that?
I said historically speaking, yes.
Yeah. I mean, the real issue, I think, is going to be the kind of like combination of cost of materials plus cost of capital, and how that plays out in terms of their profitability calculations. But I can't, I think those factors may sort of wash each other out. Really.
Okay.
Yeah.
All right. Now this one's interesting. Downsize, right? You and I both know they're baby boomers with the 5-bedroom, 3-bath houses. They probably don't owe a lot. There's the talk about, hey, honey, let's go smaller. Let's get a 1-story versus 2. We're getting older. But now, I mean, I've had some people reach out to me saying, the smaller house, given interest rates, my payment's the same. Why would we go down when the payment's the same, if not more?
But why would they pay if they have a big house that they're selling and presumably a lot of equity? Why wouldn't they have a smaller payment even if interest rates are higher? For
They could if they take all their equity, of course, and move it into the other one.
Right.
Not everybody will do that. But there is a chance that the payment is the same, if not more. Maybe it doesn't matter, but
Yeah, I just see the issue here being more that, starter homes are the hardest to find. And if you're looking for
exactly.
smaller homes,
Yeah.
there just may not be something to buy.
Mhm.
So even if there is a uh,
Willingness, yeah.
even there's a willingness and there's, yeah, they just may not be able to find anything to buy. So they just stay with the existing house. Right?
Yeah. And again, the problem, the thing for this discussion is they're not listing the big. And I think
Yeah.
this is something that I see is we're going to an environment where the low end or the affordable or the small or whatever you want to call it, first time home still has crazy demand, but we're going to see weaker demand up the stack. And this is just one example, right? They want to downsize, but there's just less interest, but they
Right.
also want to fish where everybody else is. So it's like, sorry, honey, we're just going to stay put.
Yeah.
What do you think? Is a wash any impact on demand? Or yeah.
I mean, maybe slight, 5%.
Okay.
Negative, call it.
Okay, no problem. And then the last one that I could think of is don't want, right? Lots of people have second homes, right? If you had something in Boise or Vegas or Phoenix in the last couple of years, you sold because prices were nuts. You didn't use it. Do they do any of that? Do they Airbnb? Basically, I'm trying to figure out where listings might come from. So I thought that was the last category.
Well, I mean, I don't know. I don't know how to quantify this. One thing that I do know is an issue, not an issue, is something around here is that a lot of the people who are, so in a lot of areas that are second home areas, right? The non-second home owning population is declining because it's aging out, right? Because these are like oftentimes rural areas.
Yep.
They're away from big cities. They're not where young people want to live full time. And the young people have not by and large, but a lot of young people have left. The populations are aging. And so you kind of have you have a lot of listings in markets like that.
Yep.
And the people who are buying them are second home buyers from the cities, right? So and that's kind of the exit, I think, for a lot of people. That's who they're going to sell their home to.
For sure.
So I think you may see that continuing, maybe even accelerating, because I think those are the people who are probably most likely to sell.
Yeah, I agree. The time is short, right? Yep.
Yeah, I mean, those people, they want to retire, they want to move someplace, they, where it's warmer. This is, the trend from cold to warm continues.
Oh, no doubt.
So it's, I would say this maybe a slight increase.
Okay.
5% increase in sales. So
awesome.
Looks like we're kind of washing out here, though. Like,
yeah. So again, we don't know what the sizes are because I can't find them. But yeah, this is very cool. This is what I was looking for. Again, I'm asking all of my experts that, and I think it's 8 or 9 of you that I'm going to just kind of blend together. I'll add mine in and see where we come out. So Jonathan, where can people find you? Thank you for doing that.
Sure. Come and join my free Facebook group, Multifamily Investment Community on Facebook. Or you can join my investor list by Googling Two Bridges Asset Management LLC and filling out the investor form. Or you can get on my email list. I have a free download called the Ultimate Checklist to Buying Your First 100-Unit Property with Other People's Money and Getting Paid to Do It.
Nice.
Which you can find at multifamilylaunchpad, all one word, .org.
Thank you very much. Appreciate it.
Mm-hmm.